I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Merry Christmas, Tim.
Merry Christmas, Jim. Merry Christmas to all of our listeners.
Let's take a look at what's happened in the past year and going forward, maybe a little polishing of the crystal ball. Right now, apparently, American economic confidence is at one of its highest levels ever.
Yes, it is. I saw that too. Someone sent me an article about the U.S. economic confidence levels, said that they surged to the highest levels ever recorded by a Gallup poll. And, I almost find myself wanting to feel that way. And then I've heard some other analysts talking that were feeling pretty much the same way, very optimistic. I think the election has people feeling hopeful, if you will, optimistic. But, I understand that. And like you said, in doing a little bit of review, let's look at where we're at and how we got here. I don't want to be the one to rain on the party, and the last thing I am is a perpetual bear or something like that. And I know that people may laugh at that, but it's true. I mean, I'm really not. I'm a realist. I'm looking at this. Let's go back to the 2007 top. They extended that cycle, created the housing bubble, the debt bubble, the banking crisis, and the worst financial decline since the Great Depression. And then as we come out of that in 2009, they did more of the same. And the problem has been that I have with this entire rally is that, 2009 was a so-called 4-year cycle low. And it's been extended and extended and extended. And to the point that it's literally, we've never seen anything like this ever before. Ever. And that hasn't changed. And as we moved into 2015, we did see the DNA markers finally set up. It happened. But we couldn't, nothing ever really materialized. I mean, we got our decline into August of 15. We rallied into November of 15, and then we cracked into the January, February lows of 16, which actually reconfirmed. I mean, intraday, on some of the indexes, and then according to Dow theory, it's the close that counts. And then on a closing basis, the Dow theory, primary trend change was actually confirmed in early 16. But that extension was never allowed to unwind with that 4-year cycle. The intervention, it never, the downside never expressed itself. And coming out of that 09 low, the market, it never gave a clear bullish primary trend change. It never clearly negated the setup with, marking the 4-year cycle top or the decline into the 4-year cycle low until November. And then we get this rally that leaves us where we're at now. And yes, there's no question the market's sitting at virtually 20,000. And, optimism is high and everything seems great. It makes me nervous. We need to see the Dow theory stuff set back up, which I think, it can happen quickly. On one hand, I mean, it just depends. I don't know. It can happen in a matter of weeks, or it could take months. I don't know how long that process is going to take, but once that happens again, then we're going to be set back up for the bubble to finally prick. And I guess that's what I was saying, is that, while things feel good, and we have a new administration and people are optimistic about that, and not to bring politics into it, because, everybody's always going to disagree with that, but the things that, as far from a business perspective, as I see it, and Trump being a free market kind of guy, and tax cuts and wanting to stimulate the economy, bring jobs, I mean, those are all positive things. I don't care if you wear a Democrat or a Republican hat. I mean, anybody that can complain about wanting to create jobs and make a better economic environment if it's conducive to business and that kind of thing, if you want to complain about that, you're just a freaking moron. I mean, those are positive things, period. And that's the direction he wants to go. And, that I think is what's created the optimism. The problem is he's left with this, he's inherited, or we, not him, we, the world has inherited this bubble that has been extended and not allowed to unwind in any sort of meaningful way. So it's still there. So that said, I'm very concerned that regardless of who won in this case, I mean, obviously Trump won, but it didn't really matter who won the election. I mean, I was afraid they were going to be left holding the bag, and I think that's probably the case. But until we see the Dow theory setup happen again, then we're still in the topping process, as far as I'm concerned. I think it's still a bubble. I think there's still a disaster with the unwinding of the bubble ahead. I mean, there's no time in history where a market has ever been manipulated and the manipulation stuck, not long term. And there's never been a time where a cycle has been extended like this. And we're literally, as I say, living history. I mean, it's unprecedented. And so none of those things have changed. The fact that they have extended it and we're at 20,000, hey, my hat's off to them. They've done a wonderful job at keeping this thing alive. Absolutely. Never would have dreamed it would possible. But the cue is when we see another setup with the DNA markers start to happen. And I just don't know, I mean, I don't know. I don't know what's going to happen then, but that's going to be the cue that something's bad wrong. As far as very short term, as far as this parabolic advance, and it is, looking at a chart, I mean, heck, it's straight up since the November 4th low. We should be at a short term, at least a short term top. I have some short term cycle lows due between now and the first week in, January. And then cycles nest. You have this short-term top has the opportunity of being an intermediate-term top, which has an opportunity of being a longer-term top. So I said that to say this, have to see what evolves as we move into these shorter-term lows. Does something more evolve? Absolutely, it could happen, but maybe not. I don't know. So what I'm saying is that's going to be one of the gauges. Let's see what happens. Does this short-term decline evolve into an intermediate-term sell signal? If so, does the Dow theory stuff fall in place? If so, then that tells us one thing. If not, then it tells us something else, that it's going to have to, it's going to take a little more time for it to set up. So in the process, I guess in summarizing my thoughts on equities is I still think that we have this massive bubble. And I still think that it's going to come unwound, and yet we need to see the markers fall back in place before we can say that we have something working.
We'll have more with Tim Cyclesman Wood right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what's your outlook for gold?
Well, it hasn't changed, and gold is kind of telling us something. Maybe if we think about it, just a little bit, it's lining up actually pretty well. We've talked ever since you and I have been doing these interviews. I've said that. Way back in 2011, 9-year cycle top, every rally between then and late 16, early 17 was my time frame based on simple cyclical rhythms and cycle counts. Should be a counter trend rally that's followed by further weakness into the higher degree 9-year cycle low. That's exactly where we're at. And, the 9-year cycle low is not due until it's looking like first quarter of next year. And, if, and I say this reluctantly and, almost because you've been so burnt on equities, but, unless this time is different, this should be the 9-year cycle low, coming up, and it should be a heck of an opportunity in gold. The 9-year cycle has behaved perfectly, at least so far. I want to see, with this next intermediate degree low, I want to see the December low violated. And then once we get the right short-term structure in place and some evidence of an intermediate degree bottom, then we should have the 9-year cycle low in gold should be poised to move much higher in conjunction with a brand new, fresh 9-year cycle advance. And I don't mean that the gold is going to go up for 9 years. Let me clarify that. I mean it's going to be a 9-year cycle low, and a cycle runs, the cycle runs approximately 9 years in duration from low to low. Historically, the advance has been somewhere between 3 and 4 years up, and then the remainder of the duration down. So we're facing, it looks like a major bottom. I think that's going to be a opportunity coming up in 2017 for the gold bugs, and somewhat of a long-term advance in gold. Now, think about this though. That's a bit of a warning. That tells me that gold is seeing something. Coming out of that 9-year cycle. Gold doesn't advance like that. Well, I say that, trying to choose my words. It's what I'm trying to say is it appears that the 9-year cycle low in gold and the advance out of that 9-year cycle low is sniffing possibly the problems that equities face, because this is going to be the highest level in which a 9-year cycle low has ever occurred in gold. I think this could potentially be the 9-year cycle low that the gold bugs have been looking for, where gold could just rip. I think that opportunity is there. And so what I'm saying is, if that's all true, which the 9-year cycle low is true, the highest level is true, but if it does really rip like it's going to be set up to potentially do, then gold is, that's not good for something else. And I'm thinking that something else could be an even worse banking crisis than we've ever seen before. Hey, that would make sense. The unwinding of the equity market and this bubble that we've been talking about that nobody believes. Who knows? But the dots are lining up for it to appear to coincide with some bad stuff and possibly the top in equities.
Crude oil has managed, because of the announced OPEC cut, to stay above $50. Usually in December is when we start to see a big decline. What's your outlook for oil?
I still look for that decline. Yes, it has. Crude oil has has hung in there very, very, very well. Based on the seasonality and the normal cyclical rhythm, crude oil should have been moving it for the last couple of months. Since late summer, early fall, the tendency is, and the cyclical expectation has been for crude oil to move lower, and it has defied that. But I do think that what we've seen is some uncertainty with and maybe even a sympathy rally in conjunction with this, I don't know, lack of better words, Trump rally with the election in the U.S. type thing. And so we've seen it linger and hold at this seasonal cycle top longer than normal. But I do think that there is a trip back down to retest in some degree. I don't think it's going to violate it. I just can't see it at this point because this cycle is so right translated. That would be very, very, very unusual. But I do see a decline out of a seasonal cycle top down into some sort of a good low, February, March type thing. I mean, it's the cycle averages 12 months in duration. The last low was in February, so in an ideal world, we're talking sometime in the first quarter. I do see a retest of that low, and then crude oil will be poised to move higher too. And what bothers me a little bit about this is we're going to have to feel our way along and look at the structure and what it tells us and analyze the statistics because, you have signposts, and if this happens, it means this. If that happens, it means something else type thing. So once we get down the road a little bit and we get this 9-year cycle low in gold and we get the retest with crude oil, then we can start to look at the CRB and see how commodities are going to perform. But what I think I'm seeing, and you asked me about it last time, what I think I'm seeing is that commodities are going to be set up to be much firmer, while equities are going to be set up to be much weaker. And I think once we get, like I said, the 9-year cycle low in gold and this retest, this seasonal cycle low in crude oil behind us, then we'll be able to tell a little more about that for sure.
Tim, thank you so much for all your help over the year.
Jim, thank you. And, like I said, I know people are tired of hearing the message, but, about the bubble and the stretch. But, like I said, I swear it is what it is. And like I've said before, the last thing I'm going to do is get on here and tell somebody that, something that I don't see. So, we're moving into, I think, 2017. Like I said, I think we're moving into some very uncertain times. Gold is telling us that with that cycle. And, another closing comment is that, if you read back and you look at I've got actually a book of all the quotes, from 28, 29 period. And it's just human nature. People always feel good about things right at the top and are the most optimistic. And you should read some of the quotes. I don't have them in front of me. Maybe we can do that next time. But some of the quotes that and things, comments that was being made at the top there. And like I've also said before, every major decline in history has come from a new high. So in spite of that optimism, I'm telling you guys, this bubble has not unwound, and it's going to set back up, and that's what we have to watch for.
Well, I had a news editor back in 2008 who refused to run a story of mine because it said we're about to crash. Real estate's already crashing. The banks are in bad shape. They're ready to have a very tough time. And he said, how could that happen? The markets are at their very best. They've never been better. And I tried to explain to him how cycles worked. He refused to run my story. I won't name him, Bruce Claggett, but you were dead wrong. History proves it now. We had experts like you saying, it's set up for a collapse, buddy. Be ready for it.
It is. And the fly in the ointment has been they've had far more, I don't know if I want to use the word control, but ability to extend and hold. And part of that feeds on itself is because of the optimism and the belief in the system and the Fed and the new norm. I mean, when I say new norm, I mean temporary new norm. I mean, if something stays abnormal long enough, then it becomes perceived as normal. And so all that is part of the extension of the bubble. And I mean, I just look at this and shake my head, and I know other technicians, very, very seasoned technicians that have been around a lot longer than myself, that are looking at this and they see the same thing. And, you know, none of that's changed. So, to those who are complacent, I'm telling you, this is, I don't know what to say. It's the damnedest thing I've ever seen. We've never seen anything like it. But the key is to set up with our Dow theory and our DNA markers falling in place.
Tim, have a great Christmas and a Happy New Year.
Thank you. You too.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for Tim and the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.